Welcome to the last dying breaths of the traditional financial system globally. Sounds like a pretty cliche crypto guy thing to say, that crypto is going to be deeply embedded in pretty much everything that we do as a society. But I don't have to say it because the biggest entities in the world are saying it. Only a few hours ago, BlackRock's Larry Fink and Rob Goldstein put out basically a love letter to tokenization, blockchain, and distributed ledger technology that should open anybody's eyes, even the harshest skeptic of crypto, because when the world's largest asset manager, we're literally talking trillions and trillions, talks about the future of finance, the future of pretty much everything, it's at least worth paying some sort of attention to. We're going to be diving into this today. And as we've talked about so many times on this channel, it's really on how you look at what's going on throughout life on a daily basis. When crypto is up, you could whine and complain that you don't own enough, or you can look at it as an opportunity to make situation-changing decisions with the little that you do own. When crypto is down, you could whine and complain that you didn't get rich off of your $40 of whatever crypto you decided to buy, or you could look at it as an opportunity to do some research and maybe make some moves that you didn't make during the previous cycle, whatever it may be. That being said, this is still an opportunity, and probably the best opportunity in multiple generations. We are witnessing the converging of the traditional financial system with crypto, blockchain, and distributed ledger. A handful of years ago, doing videos, we were purely speculating on what could happen with this technology. Now it seems like we've turned the page on purely speculating on what could happen, and it seems like we are at the dawn of what's going to happen. It's just a matter of time before these things do happen. We've talked about the NASDAQ. We've talked about Broadridge settling literally trillions in repo transactions monthly. We've talked about all the banking integrations, but you literally today have Larry Fink and Rob Goldstein on how tokenization can transform finance. So I'm going to read this because, we just got through a holiday weekend. Crypto's doing what crypto's doing, and it's doing the opposite of what everybody wants it to do. But this should put some stuff into perspective for you guys, not only about where we've been, but about where we're at right now and where we are very quickly heading. You can go and read this on The Economist, or you can go to BlackRock.com. This is corporate literature that just came out today. Isn't that interesting? 50 years ago, money moved at the speed of mail. When Larry Fink started his career in 1976, trades were placed over the phone and settled with paper certificates sent by courier. In 1977, a technology called SWIFT brought standardized electronic messaging between banks, cutting transaction times from days to minutes. Today, trades between New York and London execute in milliseconds. Now, finance is entering the next major evolution in market infrastructure, one that could move assets faster and more securely than systems that have served investors for decades. It started in 2009 when Satoshi Nakamoto, a pseudonymous developer, launched Bitcoin as a shared digital ledger that could record transactions without intermediaries. A few years later, that same technology, the blockchain, sparked something even more transformative: tokenization. Tokenization involves recording ownership on digital ledgers. It makes it possible for almost any asset, from real estate to corporate debt or currency, to exist on a single digital record that participants can independently verify. At first, it was hard for the financial world, including us, and he's referencing BlackRock, to see the big idea. Tokenization was tangled up in the crypto boom, which often looked like speculation. But in recent years, traditional finance has seen what was hiding beneath the hype. Tokenization can greatly expand the world of investable assets beyond the listed stocks and the listed bonds that dominate markets today. Tokenizing assets brings two broad benefits. First, it offers the potential to settle transactions instantaneously. Today's markets operate on different settlement timelines, exposing buyers and sellers to risk. The risk that one side might not fulfill their obligations. Standardizing instantaneous settlement across global markets would be a leap beyond what Swift ever made possible. This is BlackRock saying this, not me. Second, private market assets still rely heavily on paper, manual processes, bespoke settlements, and records that haven't kept up with the rest of finance. Tokenization can replace paper with code, reducing the frictions that make assets costly and slow to trade. It can turn large unlisted holdings such as real estate or infrastructure into smaller, more accessible units, broadening participation in markets long dominated by large institutions. Technology alone won't remove every barrier. Regulation and investor safeguards will remain essential. But by lowering cost and complexity, tokenization can give more investors more ways to diversify. There are early signs of progress. Tokens that represent real-world traditional financial assets, such as stocks, bonds, and so on, remain a tiny share of global equity and fixed income markets, but are growing fast, up roughly 300% in just the past 20 months. Much of the early adoption is happening in the developing world where banking access is limited. Nearly 3/4 of crypto holders live outside of the West. Meanwhile, the economies that built modern finance, America, Great Britain, the EU, are falling behind, at least when it comes to where the trading is happening. It's true that many of the companies best placed to lead the shift to a tokenized financial system, including the dominant players in stablecoins, are American, but that early advantage is not guaranteed. If history is any guide, tokenization today is roughly where the internet was in 1996, when Amazon had sold just $16 million worth of books, and three of the rest of today's Magnificent Seven tech giants hadn't even been founded. Tokenization could advance at the pace of the internet, faster than most expect, with enormous growth over the coming decades. It won't replace the existing financial system anytime soon. Think of it instead as a bridge being built from both sides of a river, converging in the middle. On one side stands the traditional institutions. On the other side are digital-first innovators, stablecoin issuers, fintechs, and public blockchains. Sidebar. A lot of the conversations we've heard about what's going to happen as real-world assets are tokenized, we've seen people speculate and just say it's never going to happen on public blockchains. BS. Public blockchains open up a level of transparency, auditability that obviously gives people a warm and fuzzy, as well as participation and liquidity. And those last two are probably key to what these big institutions and enterprises see as a massive, massive opportunity. You have BlackRock saying that this is going to happen on public blockchains. All right, continuing. The two aren't competing, the traditional and the new, so much as learning to interoperate. In the future, people won't keep stocks and bonds in one portfolio and crypto in another. Assets of all kinds could one day be bought, sold, and held through a single digital wallet. The task for policymakers and regulators is clear. Help build that bridge. Help build it quickly and help build it safely. The best approach isn't writing an entirely new rulebook for digital markets, but updating the one we have so traditional and tokenized markets can work together. We've seen how powerful that kind of connection can be. The first emerging market, exchange-traded funds, linked stock markets of more than 20 countries into a single fund, making global investing easier. Bond ETFs did the same thing for fixed income, connecting dealer markets with public exchanges so investors could trade more efficiently. And now with spot Bitcoin ETFs, even digital assets are on traditional exchanges. Each of these innovations build bridges, and we know that we're starting to see more spot ETFs on traditional exchanges as well. Thinking about XRP, Hedera, Solana. I believe Chainlink has one coming up soon. There's, take a number. All of these digital assets that are kind of in the big leagues at this point in time are getting listed on traditional exchanges for access. Bond ETFs did the same thing for fixed income, connecting dealer markets with public exchanges so investors could trade more efficiently. And again, digital assets are on traditional exchanges. Each of these innovations that have happened over the past decades has built bridges. The same principle applies to tokenization. Regulators should aim for consistency. Risk should be judged by what it is, not how it's packaged. A bond is still a bond, even if it lives on a blockchain. But innovation needs guardrails, clear buyer protections to make sure tokenized products are safe and transparent, strong counterparty risk standards to prevent shocks from spreading across platforms, and digital identity verification systems so those who want to can trade and invest with the same confidence they have when swiping a card or when wiring money. In his new book on the 1929 stock market crash, Andrew Ross Sorkin revisits the failures that gave rise to the modern financial system. Some were technological. On Black Tuesday, stock tickers fell hours behind, unable to keep up with the surge in trading. Others were institutional, a financial system that had raced ahead of the safeguards. Tokenization can modernize the infrastructure that still makes parts of the financial system slow and costly, bringing more people into the world's most powerful engine of wealth creation, the markets. But as 1929 taught us, every expansion of access must be matched by updated safeguards. Tokenization must do both, move faster and more safely, building trust as it goes. Larry Fink is BlackRock's chief executive. Rob Goldstein is the investment firm's chief operating officer and second in command. Quite literally, you have the most powerful organization that holds the most assets in the world telling you what is happening. All of these assets are going to be tokenized. Real estate alone, as we've mentioned multiple times, 300 plus trillion. And they're going to all be tokenized and interoperate with public blockchains. It's not just about if or, this situation or that situation is going to occur. It's all going to occur. Yes, private environments are going to exist in tokenized environments. 1,000%. You're going to have private environments, and you're going to have to. But you're also going to have a lot of public overlap, and they're going to want the liquidity, the transparency, all the other stuff that they would want from a public network. These digital assets that run on these layer one public blockchains are naturally going to either A, get added into newer financial products, as we're already seeing, B, operate as kind of highly liquid assets within those ecosystems of tokenized real world assets, like tokenized real world assets that are out there in the world right now. And again, I think the writing is on the wall. Note that he doesn't mention anything besides Bitcoin, but interestingly enough, all the public blockchains are the ones that are tokenizing RWAs. Nothing against Bitcoin. I mean, I'm a big fan of Bitcoin as well here, but at the end of the day, this is going to be a multi-chain future. And he mentions the same thing that we've been talking about. We're headed towards a future where you're going to have the ability to choose pretty much all assets within kind of a digital account. So whereas right now you have your bank accounts, we're already seeing that digital asset, like traditional banks in the United States, are allowing you to purchase crypto directly from your checking account. So I think that was SoFi a few weeks ago. Bitcoin, Ethereum, and Solana. It's going to be, you're going to have pretty much the same access, depending on how they classify certain digital assets. The same access as you do right now on crypto exchanges, you're going to have in a couple of, in a decade or so, from traditional accounts. And for the bigger assets, it's going to happen much sooner because it's already happening. Anyways, with all the doom and gloom that we see across crypto, you can either look at it that way and you can whine and complain or whatever, as we all do sometimes, or you can look at all of this as an opportunity, because it seems to me that the writing is on the wall, and it's not just the crazy crypto people that are slowly being ousted from YouTube, but it's everybody. It's the biggest financial juggernauts on the entire planet that are telling you what's coming as far as blockchain, distributed ledger, and crypto. And obviously this isn't financial advice. Make sure you're doing your own due diligence with all this stuff. And the same rules apply. I certainly would advise people not to invest into anything more than they can afford to, because there's nightmare stories when that stuff's concerned. But you know, there's just so much opportunity out there, guys. And then finally, you know, as a sidebar here before I close this video down, I saw this today too. Sony Group plans USD-linked stablecoin for PlayStation Entertainment System. Sony Bank plans to issue a USD pegged stablecoin by 2026 to enable faster, lower-cost payments across its PlayStation games, streaming, and anime platforms, reducing transaction fees and improving user experience. The article here, and I'll share it with you for 1 second. Hang on 1 sec. Screen, bam, bam. Here's the BlackRock article, so you guys know. It's blackrock.com/corporate, and then corporate literature. I'm sure you can find this, though. Came out December 1st. You go to genfinity.io, and you can check out the Sony article. There's some other ones, too. WireX and Algorand. Kraken launching a card, et cetera, et cetera. Anyways, I hope you guys enjoyed this video. I found this really, really telling about where we're going as an industry. So, you know, who knows if that, who knows if stuff turns around at the end of the day. It may or it may not in the very short term, but it's still, you can look at this stuff as an opportunity or not. Because I can't tell you how many times, you know, I'm out there in the wild and people know that I'm kind of into like crypto and blockchain. And they're asking me about Bitcoin at the exact wrong time, or XRP or anything, when Bitcoin's at like $120,000 and people are like, how do I buy Bitcoin? It's like, well, you're buying near all-time high. So that's probably, first off, you probably shouldn't be doing that with anything ever. So, but at the end of the day, you know, again, you could probably argue against that too. You could say, well, hey, you know, I just want to get involved because I'm scared of missing out regardless. And hey, that's a valid point. The problem is that once you get into the crypto space, a lot of people tend to over leverage and go like crazy because they like are just like, I know I was that way. In late 2016, 2017, it was wild to like watch what happened during that market cycle. And then you could even argue 2021 was even crazier, which is weird because I don't feel like we had that this cycle. I don't feel like we had that this isn't going to stop going up feeling. It actually seems like we're crashing, but everybody's been like semi-bearish for like, you know, months, which is weird because the exact top of last market cycle was whenever Elon Musk went on to Saturday Night Live and talked about Doge in 2021. I'm pretty sure that was the exact top. And then 2018, I think I remember the exact top for the crypto market, I think was in December of 2017. And it was like middle of December or something like that. And I think for certain altcoins, it was like January 6th or 7th or something. So, and it felt pretty crazy then too. I mean, I remember everybody was just like, oh my God, this isn't going to stop. And that's when it topped. But it seems like something's different this time because obviously that didn't happen. And normally bull markets end with ridiculous positivity, not with fear. Normally when there's fear, people tend to, you know, that's when bull markets start. Normally is when there's just an absorbent amount of fear. So who knows? But at the end of the day, BlackRock's telling you what's going to happen, and they have more money than all of us. So it is what it is. I hope you guys enjoyed this video. I'll talk to you when I talk to you. And yeah, hope you guys had a great holiday if you celebrated. We'll try to do some more videos here in December, and we'll go from there. See ya. Bye.